Hey guys, it's Jonny. So you've heard me talk about property on this channel, mainly talking about property in Spain and a little bit in the rest of Europe as well. I haven't really talked about property investing in the UK too much, even though it's my home country and it's where I'm originally from. And it's something that I'm interested in and I wanted to learn a bit more about. So for this video, I'm really happy to have been able to speak to Warren, who has a channel over at The Wealth Warren on YouTube, where he talks a lot about investing in property in the UK and his journey as he looks to work his way to financial independence. We're going to talk about the UK property market, the process of buying, and Warren's investing strategy in this interview. So I hope you guys enjoy it, and let's get right into it.
Okay, yeah, so my name's Warren. I am a property investor across the UK and also a banker in London. So I invest in property remotely, but in other regions of the UK that's more affordable. I've chose that strategy really because of affordability. It's a strategy that works. London is a fortune, so it's not really feasible to invest in London unless you're on a really high salary or you won the lottery. So that's really my niche as it relates to investing in the UK.
Yeah, so I know you talk a lot on your channel about you want kind of your property investing to be your legacy and for your children and your children's children. Why did you choose real estate as your route? Because there's obviously investing in the stock market, ETFs, but real estate is another one of those methods. But I'm particularly interested, what made you choose real estate?
Yeah, I think it kind of relates to the industry I'm in. I worked in banking and I actually joined banking during 2008 when the actual crash was happening, the global crash. And you just saw, property in terms of assets did suffer, but managing the bank's portfolio of distressed assets. And I guess from a personal perspective, what I saw was that a lot of the bond market, the stock market, heavily affected and took a long time to recover. Property really took a hit as well. That was a huge component of the crash. But what I did see was that particularly in capital cities like your Londons, New York's, it recovered back to where it was in those prime cities within about 5 years, which I found really interesting at the time. I wasn't looking to invest in property at that time because I was early 20s. And just about managing to pay my mobile phone bill. But I think I always kept that with me. So when it came to wanting to invest and look for an avenue to be financially independent, I kind of naturally gravitated back towards property.
So you're an expert in the UK property market, Warren. You said, London is a very difficult market to get into unless you have a large startup capital, and you've particularly looked at cities up north. So you've looked at Hull, Liverpool, Manchester, for example. So what's going on in the UK market at the moment, and where do you think are the particular cities in the north that are of interest to you and maybe to other people that interested in getting started?
Yeah, I think so. Yeah, there's a few good questions. In terms of what's going on, I'll start with the UK as a whole. Everybody remembers COVID. During that, what we actually saw for a good year and a half, 2 years, so I'm talking from around about the back end of 2020 through 2021 to about midway through 2022, when the budget was announced, but we'll get to that. There was a really huge boom. Boom is a strong word, but a surge in property prices. And what was driving that was a lot of people were, not just in London, by the way, in the UK, but globally, people were, you might be able to tell me actually if it was similar in Spain, but people were moving out of kind of dense urban areas and moving to more rural areas, trying to get bigger houses, bigger space, because they just wanted to be, understandably, away from big crowds and densely populated areas. So a lot of people were buying houses during that time. And of course, there was remote working as well. So people were like, hey, look, I'm working from home for the next year and a bit. So let me buy a house now and move. I don't need to be near the office anymore. So that happened. And then back Q4 of 2022, we had a budget that was announced by Liz Truss and Kwasi Kwarteng, who were the PM and Chancellor at the time. And what happened with that, it basically caused chaos in the market. So interest rates shot up and it made everything more expensive. It made inflation do crazy things, and obviously if you've got a mortgage, your interest payments are going to be higher. So it wasn't a good time to buy a house. So that cooled down the market. A lot of people were predicting a crash, but a crash hasn't happened. But it has cooled down. There has been negative growth in the UK for the majority of this year. So that's really the UK as a whole. To answer your question about why go up north, I think even whether it's a boom or a recession or an upturn or a downturn, there's always opportunities in property. There's never not opportunities. I just happen to think that there's more up north because it's more affordable. There's a lot more investment. Well, there is a lot of investment going up into the north as well. So it's a good time to get in there early, and that's why I invest.
Yeah. Nice. And a lot of what you've talked about there are some common themes in Spain as well. So talking about what happened over the past 2 years during the pandemic there is, like the countryside in Spain, but obviously probably what most people know Spain for is the beach and the seaside and holidays. So whereas, yes, some people did buy outside of the city, myself included, I lived in the center of Madrid for 2 years and then I bought my home kind of on the outside of Madrid, but still close enough distance. What a lot of other people did was maybe, whilst living in these big cities like Madrid or Barcelona, is they maybe moved to other smaller cities, which have a lot lower cost, and for the same reasons they can work remotely, because the concept of like a holiday property in Spain is very common as well. So that drove property prices up as well. Foreign investment, people from the US, from the UK, from elsewhere in Europe. So your kind of deals and what you're interested in is mainly, are you mainly interested in buy-to-let or HMO? Do you have a particular model that you're following with your property investing?
Yeah, so I think when I started in 2018, I started with just regular buy-to-lets because my philosophy is start with something that you understand, and then maybe progress after that onto some more complex strategies like HMOs, like service accommodation, etc. So the first two properties I bought were standard buy-to-lets in Sheffield and Liverpool. The third one I bought was a BRRR, that's buy, refurbish, refinance, and then rent it out. So that's probably one of the most complex strategies you can do. So I did that on my third property, a good 4 years into it. So I wanted to wait, and then now I'm in Hull, and I'm looking at doing service accommodation. So I've slowly drifted towards more complex ones, and the reason why I want to go towards more complex strategies is because they return higher. You get bigger return on those, but I wanted to be ready to do those. I didn't want to go in on my first one and try and do a refurb in Manchester and not have a clue what I'm doing, because it would almost certainly have gone wrong.
Yeah. Okay, so just to go back through those different strategies. So buy to let is essentially you buy the property and you rent it to one or one tenant essentially, or you maybe got two people on the listing. HMO is where you have, you're renting out rooms in a house or an apartment, you got multiple tenants. A BRRR is essentially it's a flip. So you buy the property, you refurbish it, you rent it out, and you repeat. And the idea is, it's an accumulation of capital. Serviced accommodation is not something I've come across.
Yeah, I mean, it's basically, some people call it holiday lets. It's Airbnb and Booking.com. So the reason why it's slightly more complex is that the complexity is around the maintenance and the upkeep of the house in between guests. Like logistically, there's a lot to it. So managing someone checking out, getting cleaners in to clean the house, doing the linens, having it ready for the next person to come in, and that might be a day later or that same day. That's really where the complexity comes, and also just having it up to a good standard. So it's almost like having a mini hotel. Your main competitors or comparables are hotels. So everything has to be really nice and up to standard in a service accommodation property.
So in terms of the purchasing process, obviously I guess you have to travel when you go and obviously visit the property, and then when it comes to stuff like the appraisal or sign in for the property, do you have to travel as well? What is the general process?
Yeah, so to view a property, Some people don't, but I definitely wouldn't recommend that. But to view a property, you want to go travel. So I travel up north to different cities quite well when I'm buying. I'm usually looking several different places and eventually home in on one. So I go and do the viewings, and I have a process that I go through when it comes to the viewing stuff that I want from a house. So stuff looking at the condition of it, what work would be required to be done, if any, the area, scoping all of that out. So that's the viewing part. Then you make an offer. Offer gets hopefully accepted, and then you go through the process of the longest process, which is getting a mortgage approved and the conveyancing. That's done by your legal team. So that's really the process. So I wouldn't go back to a property after I viewed it really until the end of the process, once it's actually completed.
And do you apply for financing when you do your deals as well? And how do you manage that aspect at the same time as going through that process?
Yes, so I apply for a mortgage. Usually you get what they call a decision in principle. So that's really writing to or emailing a broker. I use brokers all the time, and saying, look, I'm looking at a property. It's going to be around about this price. Can I borrow that much? And then they'll go out and have a look at what lenders would be willing to lend to you at that price. So you get an indication. It's not an offer, but it's an indication of how much you can borrow. And then once you make an offer and it's accepted, you basically convert that decision in principle to a firm offer. That's when they do stuff like the valuation, and they ask you for all of your proof of income and a lot of background checks and KYC checks that goes into that. But that's really how it works, and that happens alongside the legal process.
Yeah, that was the same process pretty much I followed when I bought this apartment as well. One thing that I've noticed in Spain, at least from speaking to a mortgage expert here, she said that often if you go into the individual bank branches, you might be able to negotiate better interest rates because of the targets they have for mortgages approved, and their revenue targets. So sometimes it can be better than going through a broker or doing the process online.
That's really interesting, because it's almost the opposite here. They say go for a broker to get the best rates, because an individual generally in this country can't get better rates themselves going to banks. That's really interesting.
Yeah, but then again, there's obviously the aspect of, particularly if you're a property investor, then having a banker who understands what it is you're doing, who knows you, who knows your profile, and what you've done in the past as well. So, and did the brokers, did they charge you a commission in the UK when you make your?
Yeah, usually pay anywhere between £300 and £500 each time. That's when they submit the application. So yeah.
Okay.
Okay, yeah. In Spain, you got similar. You got a couple of brokers that charge commissions, but you've also got a few, not exactly brokers, but like mortgage finder services. So there's no cost to you as a buyer, but behind the scenes, the banks are paying commissions to the finder, so that they can get their mortgages approved.
Yeah, it's a good point that you raised, actually. There are also some brokers who work exactly the same way. London and Country are a good example. They call themselves one of the biggest mortgage brokers in the UK, but they get their commissions from the bank directly rather than from you. So yeah, it works that way here as well.
So when you buy a property in the UK, what costs are associated both in the buying process and once you own the property, and estimations approximately of how much they'd cost?
Okay, so you've got your legal costs or conveyancing costs. I'd say roundabout, you'd want to budget round about £1,500 to £2,000 for that each time. You've also got your broker costs that I just mentioned, so between £300 and £500. You don't have to use a broker, of course. You can go to the bank directly, or you could try one of the brokers who get their fees directly from the bank. So you could pay nothing for that. But I personally use paid brokers because they do get me access to what I perceive as, market leading rates. You've also got stamp duty. So stamp duty is the tax on any property bought in the UK, and that's a percentage of the value. So it depends. There's a good site. If you just type in, if you're in the UK, stampduty.gov, you can put in the price of the property, whether it's your first or second one, it will tell you how much stamp duty you'll pay. But to give you a rough estimate on on the properties that I buy, that are around between £100,000 and £130,000 each time up north, stamp duty is round about £3,000 each time on those. And then you've got insurance costs. So when you buy the house, you have to insure it. That's when when you complete. So that's about £30 a month, and you pay that for the duration of owning that house, unless you don't want to insure it, which would be very unwise. So operational costs, you've got the insurance costs that are ongoing. You've got agent fees. So if you have your property managed by a letting agent, you've got those anywhere between 8% and 12% per month of gross rent. You've also got, if you own a flat as opposed to a freehold house, you've got service charge and ground rent. So service charge can be, it really does vary. It depends on who's managing it, but on average I've paid, for the ones that are flats, for service charge I've paid around about £1,500 per year, and ground rent around about £300 per year, and I think that's everything. Okay. Oh, sorry, and also you've got repairs, so ad hoc. Of course, houses wear and tear, so plumbing, boiler needs replacing, stuff gets broken. Just budget for that as well.
Challenges that come with having a property in the UK and managing a property.
I think it's going to be the same as anywhere. The main one I'd call out is the changing government legislation. So in the last 7 years, you've had change in legislation that basically prevent landlords from being able to deduct interest costs from their income for tax reasons. So that's why a lot of people have started to buy properties in a limited company, because that's a way of getting around that. You've also got just a lot of licensing that's coming in, not just for service accommodation, but just general buy-to-let landlords. They're talking about landlord licenses. So I've had to apply for licenses in Manchester, in Sheffield, in Liverpool, and each time you pay a good £400 just to be in a database. They're talking about changing the law to be able to evict tenants, to make it even more tenant friendly. So it does seem, and I'm not one of those landlords who moans about the government, but there is a lot of legislation over the years that has come on to landlords that makes it less appealing for some landlords.
And have you had any kind of issues as a property manager? I know you talked about you sold a property recently because you made a loss on it. What kind of challenges have you had in terms of property management outside of kind of the government aspect?
Property management. So I sold that property just because service charge was going up by a ridiculous amount each year. So it wasn't as profitable as it could be. I think in terms of real challenges, I had a tenant in one of my properties in Sheffield who basically didn't pay on time for almost a year. So I had to end up going through an eviction process to get them out. Luckily, they left in line with the legal process, but if they'd have stayed, would have had to go through court, and that would have taken even longer. But you really want to, and I haven't had bad experiences, but I've had one out of in 5 years, so it's not exactly a bad strike rate. But you really want to vet your tenants. Even when your letting agent recommends someone to you, I'd particularly ask how much they earn, so how many times over can they afford their rent, and also just my personal preference, but based on my experience, I'm probably going to lean more towards kind of more mature tenants, because my last one was just out of uni, first job, so the concept of maybe responsibility, paying on time, was a bit alien to them. They'd just not pay and not tell anyone and just ignore communications. So I kind of feel like more mature tenants don't do that because they're a bit more adult. So you live and you learn.
Good stuff. So I hope you guys watching enjoyed that discussion as much as I did. I really learned a lot and it was really great to be able to speak to Warren. Leave a comment and let me know, what are your thoughts on the UK property market, and are you investing in the UK property market? Till next time, I'll see you on the next one, and let's get this money.